Okay, what's up everyone? Welcome back. Welcome to a new trading week. This is Jeff here with FXMindshift and welcome to your Sunday weekly review. So as you can see from the calendar, we do have some red folders this week, although a little bit later in the week, Wednesday and Thursday. Keep in mind that we are now into the month of December, and you know, this time of year, this period in the year, the end of the quarter, December to January, usually we're met with, you know, low volume trading, low volatility, and you know, just not really ideal conditions, right? So expect a lot of consolidation, expect a lot of, you know, ranging. And expect not to be excited when you're trading and sitting on the charts, feeling bored watching and waiting for setups to occur. So this week we've got a couple of red folders on Wednesday, 8:30 New York Open. We have for USD, core CPI, and CPI. Also crude oil inventories at 10:30, but that is a non-red folder. Thursday we've got the big news this week, which is the Euro main refinancing rate and monetary policy summary. That's going to be at 8:15 a.m. and then 8:30 New York Open. We've got USD, core PPI, and also our unemployment claims, which we have every week. And then, of course, we have the ECB press conference following the refinancing rate and monetary policy statement. That's going to be at 8:45 for Euro. Okay, and then Friday we've just got one folder, 2 a.m. for GBP, and that's GDP red folder. And then that's going to round out our news for this week. All right. So let's take a look at our charts. We're going to head over to the DXY chart and we're going to do our monthly top-down analysis as we always do. So if you take a look at the chart here, we are currently sitting inside of this monthly range consolidation. All right. The last thing that we did basically was we went up and traded into this monthly imbalance here, right? As you can see, the reaction from that after taking the internal liquidity, sweeping that, taking the or reacting to the monthly imbalance, and then seeing price reject and come back down into the range, right? And so this is where we are currently inside of that wick rejection and coming back down into the range here. We can see that we have a monthly imbalance that's formed on the way up that price is now trading back into. So this is where I'm expecting price to, you know, at least come back into or fill, right? And so we're looking for, you know, continuation or bearish continuation down into that zone there on the monthly perspective, right? Now on the weekly, as you can see here, let's put up the weekly chart markups. All right, this is where we had the break of structure. So we were trading inside of this weekly range, up and down, right, respecting both the highs and the lows. The last low here respected after taking out the internal liquidity here, and then seeing the big push up, right, which then went on to break structure. And then this is where we tapped into the weekly imbalance as well as that monthly imbalance we saw on the monthly chart, right? And then this is the reaction that we got and the retracement. So you can see that we have traded back into the weekly imbalance and pretty much filled the weekly imbalance, right? And we did get a bullish close on the candle, although we did get a wick. So this is kind of where we want to see if price will continue to run down further into the range, because we do have another smaller imbalance just below that right here. And that would be where, you know, the monthly imbalance is where we're looking to fill the monthly imbalance, right? Where we hadn't finished up there. So if we continue to roll down on the weekly, that's where the next target will be. Okay. And then seeing if, you know, we'll continue this week. We open this week. Let's take a look at the daily and see if we have some confirmation of that movement down. Okay. So as you can see here on the daily, nice swing high has been formed, right? After the break of structure over here, we can see that there is a daily change of character, right? As price retraced back into the range, we took out the last lower high, or higher low rather, which created the swing high and the rejection. Now we're trading into the daily imbalance here. Okay, so you can see here the rejection from the daily imbalance and reaction is a bullish move back to the upside. So this is currently the range that we are in. Okay, we're in a bearish range and we've already swept liquidity to the downside here. Let's go to the 4-hour and let's depict this a little bit better here. So basically what I'm looking at right now is, are we going to be respecting the 4-hour range, right? And the 4-hour range currently is this high to this low, right? Daily imbalance that we hit over here to the left, you can see the 4-hour, I mean the price delivery on this is almost to the pip, right? As you can see, we just basically filled in that 4-hour imbalance, and then we had a big reaction to the upside and then move higher. Okay, so right now this is our 4-hour range. Obviously, we'll be looking for price to come back and retrace and maybe react to some 4-hour premium points of interest, right? So the OB at the top of the range is going to be this guy right up here. Okay, and also we're going to be looking for price to basically hold this bearish range. Okay, so if we are going to continue to be bearish, then price will find some sort of point of interest in this premium range up here to give us a bearish reaction. Currently, we are bouncing and respecting the OB right here, which gave us this pretty significant shift and the move down. However, we have swept liquidity to the downside here, and we've got a pretty large, pretty strong reaction back to the upside with no real clear, I don't see really any clear imbalances that we can, kind of come back into to mitigate. So really, I'm just looking for price either to come back to this premium up here, or even to come up and sweep the structure completely, right? And maybe we'll come back into these imbalances here that we didn't, fill from the moves that happened here. So if we are going to continue bearish, this is going to be the range that does it. We'll be looking for price to, continue from, reactions from points of interest here. So initially what I'll be looking for on the dollar is potentially a move to the upside, right? And then seeing if we get reactions to, points of interest in the range here to continue down later, right? So we're going to look for a move higher first before we move lower. XY. Heading on over to euro dollar next. Okay, as you can see here, we have on the monthly, same thing, basically monthly consolidation. However, we did break out and take out the internal lows here, which is the sweep of liquidity that's marked, and then trade it into the monthly imbalance here, right? And as you can see, the reaction from that was a move up, and then we're currently sitting just above that wick reaction in this little doji candle right here. So again, we had a monthly imbalance formed on the way down and currently trading back into that. So I'd like to see price to continue higher into that monthly imbalance and possibly fill it, okay, as we go higher. Dropping down to the weekly chart, right? As you can see here, we have the break of structure, okay, and then the reaction after the break of structure, and then the move back into the weekly imbalance here, okay? So we'll look to see if we can fill the weekly imbalance or continue higher to fill the rest of the weekly imbalance. We'll also look to see if we can trade up into the higher imbalance here and the OB before making a lower high and then the continuation down again, which is what we would expect from EU at this point here after breaking the structure lower, right? So let's go into the daily. Right, and from a daily perspective, as you can see here, breaking structure to the downside, creating the swing low here. As you can see, the structure is forming, failing to push lower. So we've got our higher low here and basically like an inverted head and shoulders level, okay? And then price has come up and swept the highs and given us a bearish reaction. So we could, from this point here, we could see price just basically sell off, okay, and continue down. However, based off of, just price sweeping liquidity here, right, we want to see if price is going to basically hold the lows. And so we're going to see if price is going to hold the daily OB, which is this one right here. Okay, because we're currently trading into that right now. And if we see price continue to hold and make higher lows, then obviously the draw in the next liquidity is going to be to take that high that we just created over here, and then also trading back into the imbalance and the OB over here. Okay, so those would be the next concurrent targets if price continues to hold the low. If price then breaks lower here, right, then obviously we're looking for the continuation lower and then targeting this low as the draw, right? So we'll see how that kind of works out. At the start, let's go to the 4-hour here. We'll get a little bit more clarity, see if that is going to give us some more clues as to what will happen. So on the 4-hour, as you can see here, we have our 4-hour break of structure. Okay, to the upside. Actually, technically not a break because it didn't close with a candle, right? But we did get a wick above, and a pretty significant wick is that. And then we saw a big bearish engulfing candle following the rate of those stops above those highs. So basically now we're going to see if price is going to continue back down into this H4OB, right, which you can see is the reaction that we're getting right now, this bullish reaction here. So if price is to continue bullish following this reaction, you know, could do that from there, or we could trade a little bit further down into the OB. But remember, the daily OB that we're looking for it to hold bullish is this whole structure down here, right? And so that last, you know, kind of OB there on the daily, holding the lows here, subsequently making a higher low, right? And continuing the structure that we're seeing basically right now, which is this right here, right? Lower, higher high, higher low, right? And then basically continuing up like that. Okay, so that's kind of what I'm expecting price to do, right? To trade a little bit higher up and, you know, trade into the areas up here. But watching this hold is going to be the key to that, right? So basically, if I see price giving us a lower time frame change of character here after creating the swing low and reacting to the order block here, then we're going to see price continue to push up, and then this will be the target, you know, to run higher. Concurrently, the other scenario, like I said, is if the order block doesn't hold, right, and we see price push through. So basically, we'll get a reaction here, a failure swing, a lower high, and then we'll see price run below and break through the OB, and then we'll see continuation lower, and then obviously the draw is going to be the low of the wick down here. All right, so two scenarios that we can see play out at the start of this week here. All right, next we're going to go over to GU. Okay, and so from a monthly perspective, we are still holding the monthly OB at the bottom of this range right here. Okay, so you can see here we had a nice wick rejection and currently holding a bullish candle, although it's, you know, kind of a doji candle right now, not really that bullish, but we are certainly holding the level. We haven't been trading lower, right? You can see we're rejecting the wick of the last monthly candle, okay, and we're still holding inside of that range. So technically right now we are holding bullish. If we go over to the weekly chart, okay, what we can see is we have a hold of the weekly OB, right? After internal liquidity was swept, we had a nice 3-bar swing formation here, and then the continuation after taking out that high of the last week's weekly candle. But we are trading into now a weekly imbalance, a bearish imbalance area here, okay? And we need to see price basically either hold this area, okay, or reject from this area in order to be bullish or bearish. So if we are going to remain bullish and continue higher, then we should see price fill the imbalance here and trade higher, right? And basically what's going to happen is we'll get above the level here, and this will turn into a zone flip area. It'll turn into a support area. We'll see price actually hold the imbalance on the way up, and then we should see price go higher into the range, okay? And then look for run above the highs here, or at least into the bearish imbalance, the next bearish imbalance over here. The other scenario, of course, is if we don't hold the level, okay, and we reject the imbalance right here where we are, because you can see we are getting a wick rejection. So then price will then continue lower, and we'll see price run the previous low that we created, and then we should see continuations lower from there, targeting the subsequent lows down the range, okay, back to this imbalance over here. All right, and so that is the weekly. Let's go down to the daily. Right, now on the daily, as you can see, we have a daily break of structure. Okay, so bearish order flow, definitely, but we are currently trading inside of this daily range. Okay, so the last break of structure from this high to this low, right? And now we can see that we have a daily bullish change of character, right? And then trading back into the bearish imbalance here, right, which we created on the way down. So current order flow on the daily right now is bullish, right? And so we are seeing reaction to the bearish imbalance. We have the bullish OB here that we're going to watch price trade back into. And if we hold the OB area, then we should see price creating a higher low here and then continue to run higher. Okay, so this is going to be a retracement back into this range, which likely is going to be a 4-hour range. So let's take a look at the 4. All right, and on the 4-hour, as you can see, we have a break of structure, a retracement, okay, back into the imbalance over here, another break of structure higher, and now a retracement back into the previous range. Okay, so pretty simple. We have this H4 range, which is this high. Oops. Right, this high to this low. Right, you can see the daily OB area here, or this is the H4 consolidation, basically. So we refine that to the H4 zone, which is right now right here, right at the 50% / discount area. Okay, and watching to see if price is going to hold the zone here. Okay, so obviously this whole area is what we'd like to see price hold, but we're coming back into the top of the zone right now. So we'll see if we get a reaction here, or if we get, you know, price to run a little bit further down into it, and then seeing price create a higher low and then a continuation up. Okay, if price continues down through the level, then we'll have a 4-hour change of character, and then obviously we'd expect price to then create a lower high over here and then continue down and run for the lows over here. Okay, so those two scenarios here, watching this level intently as the week opens. That's for GU. Next, let's go over to gold. All right, so gold on the monthly, there's not much we can kind of discern from the monthly other than the fact that we are rejecting the monthly imbalance right here. So you can see a wick rejection after trading back into this monthly imbalance, which we created on the way up. We formed a swing high. This is, you know, potentially a reversal high. Okay, as you can see, the bearish candle, but you know, we are rejecting the level here and holding bullish as of right now. And the candle that's forming right now for December is trading inside of that wick rejection, right? That's as we've seen from many of the other pairs today. So let's go over to the weekly. All right, and on the weekly, as you can see here, we have a pretty strong rejection off of the high, coming back into a weekly imbalance / OB, and a pretty strong reaction from there as well, but trading back into this bearish OB right here. So we're basically stuck inside of this kind of smaller range here, right? And we're currently holding both the bullish POIs and the bearish POIs, right? You can see reaction bullish and also reaction bearish. So we're kind of caught in the middle of the consolidation here. So I would not really look for something, you know, clear until we get a break out of the range. This, you know, the high and low of this range here. So let's drop down to the daily and let's see if we can get a little more clarity on the daily. All right, so for me right now, the draw is going to be the lows over here, right? And the reason being is that we had a high created, we retraced, a pretty big retracement to the downside here. We swept liquidity after taking the lows and trading into the imbalance here, which gave us a very strong reaction to the upside, okay, which traded up into the daily imbalance, okay, here on this bearish range. So technically we had the break of structure and we have a bearish range. We have price returning to a premium point of interest here, which is this imbalance, and giving us a very strong reaction, which is this big bullish engulfing candle. Okay, lows created after trading into the daily bullish imbalance here, right? And then we can see a little small pullback consolidation, which is, you know, showing weakness basically, right? So I don't really expect price to, you know, go higher given the candle action that we're seeing here, and also because of the bearish reaction in the premium of this bearish range. And so I'd like to see price basically, you know, maybe come back higher one more time, maybe to sweep some of these internal highs that we made, but then coming back through and running this low here. This is going to be the next draw for me, and trading further down into this bullish imbalance to see if we in fact run the lows, right? So that's the daily, dropping down to the 4-hour. Okay, we can actually see this nice consolidation range that's forming, or that has been forming, all right, the last couple weeks. And we can see basically there's a lot going on in there. Okay, so here's the big drop. Okay, here's the reaction from the bullish imbalance, which promptly set price higher and into this consolidation. But as I said, we can see that the order flow, the bearish points of interest, are all basically holding, right? You can see price getting a large reaction from hitting the OB here, creating another bearish imbalance, which then we trade up into, and so far holding, right? We don't trade up above, we're actually holding the OB after trading through the imbalance here, but you can see price has then continued down and swept all of these lows. Okay, so the reaction here, trading back to the H4 OB and the imbalance here, I'm expecting for price to basically go lower at this point. Okay, once we break below this H4 low, and then we'll look for the continuation to lower points of interest down here, possibly the imbalance in this lower end of the range. Okay, and that is the outlook here for gold for me. All right, and last but not least, moving on to NASDAQ. Okay, monthly perspective, as you can see here, we've got the respect of the monthly candles and the monthly OB, right? So the monthly range is obviously the order flow is bullish. I mean, we've just been going higher and higher. We had created all-time highs at the end of the week here, the high being 21,669.25, so basically 21,670, okay, and the candle is still bullish, right? And we still see a lot of bullish momentum to the upside. After sweeping the highs here, right, trading back, into the candle range here, we didn't even get a very strong retracement. So there is still a possibility of price coming back into this monthly OB here on retracement. When we create some sort of swing high, we'll be looking for a reaction back in here. But so far, you can see everything is just very bullish. So going to the weekly chart, if we take a look at the weekly, we can see the last break of structure over here, right? Which basically price is now run through. As you can see, they're not really even a very strong retracement. I guess we did get this one big bearish candle, which then respected the weekly OB here. Okay, and then that's where we see price now keying off of and trading above and breaking the highs, right? So we can look for price to come into this bearish OB when it forms a swing high, but as it is right now, I would just, continue to ride the momentum higher and see if we create that swing high for the retracement. All right, going into the daily chart, okay, we can see a little bit clearer the structure here, right? After the break of the highs, okay, we're just basically, taking off right now. So we don't know if we're going to create a swing high anytime soon, or if price is just going to kind of take off at the market open. All right, but we'll observe price and we'll see. If we get a very large retracement back into the range, I'll be looking for the daily OB here, reaction back into the range, and the imbalance above it. All right, so basically we're looking for price to create a swing high, come back into the range here, retest this OB, and then continue higher from there. Right, and that is basically generally the outlook here for NQ. Let's go to the 4-hour to see if we can kind of further corroborate that. All right, so 4-hour we can see here is very bullish, right? After the break of the 4-hour structure, all of this accumulation here basically ran through that, right? And then still going. So this little tiny retracement that we got at the top after breaking this high, and then this big push off of that little consolidation is where we left off the week. Okay, so I'd like to see price come back into this zone here, right? Back into this imbalance area, maybe come back to mitigate the highs of this little retracement, right? And then looking for the continuation. So on a 4-hour, might even look like this. Okay, the immediate retest of the lows, higher low there, and then the continuation up. Okay, and that is the rundown for today. So if you remember last week, there was a special webinar that I was going to hold for you guys, and that was going to be on futures trading. We're doing some really great stuff in the group right now, trading futures. People are getting, funded. People are getting passing challenges, and I have a whole class, presentation that I'm going to share with you guys next week on that and how you guys can get involved in that if you're interested. Okay, so there's going to be a link below in the description for you guys to sign up for that class. And if you're interested, go ahead and put your name and email. You'll get the details to join us live. You'll get the login link and that'll be next Sunday, December the 15th. All right. If you cannot make the class live, it's going to be 10 a.m. Eastern time. All right. But if you cannot make the class live, there will be a recording. But definitely you need to sign up for the class to get the recording access as well. All right. So make sure you do that. Link is below in the description. That is going to do it for this week, guys. If you have any questions at all on the rundown, go ahead and leave some comments below. But that is going to do it. Hope that analysis was helpful. Good luck with your trades this week. Sign up for the web class below in the link, and we'll see you guys on the next video.
Feel me.